Hello, welcome to the European Open Briefing for Thursday, February 15th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The sell-off in the US dollar continues. This comes despite the fact that yesterday's much anticipated inflation numbers out of the US came in above expectations. This sent US government bond yields soaring. But stock markets shrugged off the data. We saw US shares closing up yesterday, and global stocks are up this morning. The euro and the pound are benefiting still from the weaker dollar rising back above key levels. Same applies for commodity-linked currencies such as the Aussie, which also benefited from a strong employment report out of Australia this morning. And oil prices have jumped higher following comments by Saudi Arabia's energy minister. This comes after data yesterday showed that US production reached a record level in the prior in last week. So let's start with the dollar. We can see here the dollar index and dollar yen both heading downwards over the past week. Dollar yen hit a fresh 50-month low 106.15 earlier today. Dollar index fell to two-week low of 88.59. US Treasury yields have hit a fresh four-year high of 2.94%. So that boost to bond yields came after yesterday's CPI data out of the United States that showed annual inflation unchanged at 2.1% in January. Expectations were that it would fall to 1.9%. We also had retail sales data month on month. They unexpectedly fell by 0.3%. Forecasts were for a growth of 0.2%. And we also saw a prior months, the downward revision in the prior months. So a bit of a odd situation where we're now seeing GDP revisions being revised down as a result of that retail sales data. But at the same time, we're seeing expectations of a rate hike rising. Markets are now fully pricing in 4 rate hikes in 2018. Despite that dollar isn't benefiting from any of this, it's being pressured by worries about the rising US deficit, as well as expectation that other central banks around the world will be raising rates soon if they haven't already. The yen is being broadly supported by the weaker dollar. But we did manage to see shares in Japan close up this morning. The Nikkei, which had been struggling, did manage to end the day higher. Japan's finance minister, though, doesn't appear to be too concerned about the stronger yen. He said that it's not strong enough yet to warrant intervention. And moving on to European currencies, we can see both the euro and the pound heading higher. They briefly fell yesterday after the inflation data. So the inflation numbers only gave a very short-term boost to the dollar. The euro briefly touched 1.2510. That's a 2-week high. Sterling is back above the 1.40 level against the dollar. We did have Eurozone data as well yesterday. Industrial production beat expectations in December. The annual rate jumped to the highest since 2011 at 5.2%. We also had the second reading of GDP for the fourth quarter that was unrevised at 0.6%. The pound didn't see much of a reaction to that speech by Boris Johnson on Brexit. It didn't really contain much information, any details about the Brexit process. It was mainly about creating optimism about Britain's future after leaving the EU. But for now, the pound is finding good support from the weaker dollar. It's comfortably above 1.40. Euro is trading just below 1.25. Let's move on to the Australian dollar now, because yesterday it did suffer quite a bit from the US data, but then it did recover very quickly. It did fall to around 0.7770 yesterday. Now it's trading around 0.7963 against the greenback. That's a 2-week high. We had jobs numbers out of Australia this morning. The economy added 16,000 jobs in January. Forecasts were for 15,000, although we did see quite a big drop in full-time employment. So that normally, big drop in full-time employment normally sees a negative reaction in currency markets, but I guess it's all about the weaker dollar. dollar this morning. It's also worth pointing out that the jobs being added in January, that makes it the longest run of growth since records began in Australia. So that highlights the tightening job market in Australia. Also benefiting the Aussie are higher commodity prices. Let's move on to the South African rand because the president there finally gave in to pressure to resign. So we can see that speculation about Jacob Zuma's future as well as weaker dollar. We can see the South African rand has been rallying against the US dollar since November. It had actually slumped to a one-year low of 14.57 to the dollar back in November. Now it's reached a 3-year high of 11.64. So it is hoped that Zuma's successor will do a better job with the economy in South Africa, which had been plagued by corruption and mismanagement under the former president. Also, the South African rand is also closely linked to commodities, so that rebound in commodities is also helping the rand in recent days. And finally, closing with commodities, oil prices. We can see that big lift yesterday after comments from Saudi Arabia's energy minister, who pretty much said that they would prefer to have the oil market tighten more than needed, rather than have an early exit from the output deal. So that did boost oil prices, despite the fact that US crude stocks rose by less than expected last week. But we did see US output hitting a record 10.27 million barrels a day. So the comments from the Saudi Arabia's energy minister, as well as the weaker dollar, have helped offset that rise in US output, at least in the short term. We're seeing WTI trading near one-week highs around $61.20 a barrel. And finally, moving on to today's economic calendar, we can see we had very disappointing machinery orders out of Japan. They fell much more than expected in December, a big drop of 11.9% month on month. So that could be the indication that growth could be slowing in the coming month. We can see the employment data there out of Australia. We don't have any major data out of Europe, but in the US section, we're going to see producer prices as well as industrial production. And worth mentioning that the Chinese markets are closed today. They will be closed for the next week for the Lunar New Year celebration. That's it from me. Thank you very much for watching, and have a great day.